Good evening, everyone, and welcome to the final session of the What's Next in Real Estate series. My name is Heather Lader, and I am a first-year student in the MA and MBA in Design Leadership program here at the Cary Business School. I also serve as the Vice President for the Real Estate and Investment Association. Thank you all for joining us for what is sure to be an insightful conversation with Dean Alex Triantis and Mary Hogan Preusse. Although our virtual series is coming to an end, students, alumni, faculty, and staff are invited to join us for an in-person celebration of the Edward St. John Real Estate Program on April 7th at Elephant and Castle in DC. Before I introduce our speakers, I'd like to remind everyone that if you're comfortable, please enable your cameras. There will be time at the end for questions and answers, so please drop your questions in the chat, and all are welcome to stay on after the session for some informal networking. This evening's discussion will be led by Dean Alex Triantis. Dean Triantis is the third dean of the Johns Hopkins Cary Business School. He joined the Cary Business School in 2019. Prior to joining Cary, Dean Triantis served as dean of the Robert H. Smith School of Business at the University of Maryland from 2013 to 2019, and chair of the finance department from 2006 to 2011. Now, it is my pleasure to introduce today's featured speaker, Mary Hogan Preusse. Mary Hogan Preusse is the lead independent director of Kimco Realty and serves on the boards of 3 other public companies: Digital Realty, Host Hotels and Resorts, and Realty Income. She has over 30 years of experience in real estate, investment management, leadership, and strategy. Preusse also previously served on the board of Verit, and she is also a senior advisor to Fifthwall, the largest venture capital firm focused on technologies for real estate industry. She is also a member of the board of directors of Industrious, a private flexible workspace provider. Prior to her current work as board director and advisor, Mary served as managing director and head of America's listed real estate at APG Asset Management US, one of the largest institutional real estate platforms in the world. At APG, she is responsible for managing the firm's public real estate investments in the Americas, which encompassed over $13 billion in real estate securities. During her time at APG, the firm was widely regarded as pioneering and leader in the use of REITs as proxy for direct real estate investment, and an early adopter to requiring ESG standards for real estate investments. Preusse also served as a member of the executive board of APG from 2008 until her retirement in 2017. Preusse graduated from Bowdoin College with a degree in mathematics and has served on the college's board of trustees since 2012. She currently serves as a member of the Cary Business School Real Estate Advisory Board. Now, I'd like to turn things over to Dean Triantis.
Thank you so much, Heather, and welcome everyone to another edition of What's Next in Real Estate. Really excited to have this discussion together with Mary. Mary, thank you so much for being here, and I'm going to pester you with a few questions here, and but also hope that our audience, as always, is active in the Q&A and throws out some questions as well that we'll get to in a little bit. So thanks, Mary, again for being with us.
Thanks for having me. It's an honor.
Well, super. Let's start. As Heather mentioned, you're on several different boards, but you are the lead independent director of Kimco Realty. And so I was wondering if you could share a little bit about what that role really involves, starting with Kimco, and maybe you can talk about some of the other board activities that you're involved in.
Yeah, sure. Before I jumped into board work, I had a concept that it was quite administrative, and obviously there's an important procedural part to it, but the rest of it is much more strategic. So Kimco is one of the I think it's the largest owner of open air shopping centers in the U.S. And it's been Kimco came public in 1991, really sort of relaunching the concept of public real estate companies. It's a really great company. So I'm the lead independent director there because there is a chairman of the board, Milton Cooper, the founder of the company. He's chairman of the board, but he's not independent. And so when you have a chairman of the board like that, companies like to have, you are required to have a lead independent director. So what I do is I preside over the Nom and Gov committee, which is the committee that that evaluates the board and its work and the committees that it's doing. I work closely with Kimco's awesome CEO, Connor Flynn, in terms of setting, what we're going to discuss at our meetings, what strategy maybe is missing, or what strategy we should be focusing on, that kind of thing. But it's all of my companies have great management teams, and so that part of the job is not hard. And then for the rest of the other companies are Host Hotels and Resorts, and Realty Income, and Digital Realty Trust. And on those boards, most corporate boards have 3 committees. You have Nom and Gov, which I told you about, Audit, which is self-explanatory, and Compensation, which is in charge of paying, in charge of setting pay for everybody. And so board members typically sit on at least 1, if not 2 of those committees. And so, and the boards meet 4 times a year. It's a really important thing when you are contemplating board work to find out the company's board calendar as soon as possible, because there's a high probability of overlap. And I'm quite fortunate in that my companies meet over sort of an extended period of time. So I really rarely even have meetings next to each other. But we convene 4 times a year in person, except for the last 2 years. We've almost all been virtual. And then over the course of the year, there's frequent calls or requests for approvals or documents to read. So that's sort of how it's all set up. And then a final just thing about the work of the board. I was a portfolio manager for a long time before I did this, and so I was buying and selling stocks. And you know how that works. If your portfolio does well, everybody's the yay team, and if your portfolio does badly, it's like, Mary, the portfolio did badly. It's so interesting on a board because it's a group of 8 to 10 people making a decision. You all have to make the decision. Nobody owns the decision. And so I've learned a lot about strategy, about how to bring a room around to my idea, or giving up on my idea if it's not a good one, compromising. It's extraordinarily interesting.
Yeah. Well, thanks for sharing all that. And one of the areas in which we hear a lot of board activity and board, frankly, development at this point in time is on ESG. And I was very much looking forward to this for several reasons, to talk about ESG. For one, APG has been known as sort of a trailblazer in this area. Yesterday's UN climate report that came out that got a lot of press attention, as well as the SEC new rules on climate change and reporting. So help us kind of work through what does that all mean for a real estate company? What are some of these sort of forward-looking ideas that you applied at APG, and how is that manifesting in terms of your board roles as well?
Sure. So the whole concept of ESG taken together, right? Environmental, social, and governance concerns. Those are all part of being a socially responsible investor, being a good stakeholder. So that's because it's getting to the point where the 3 of them have less and less to do with each other, but they do, right? Because it's all coming together and being a good corporate citizen. APG Asset Management is a subsidiary of one of the largest pension funds in the world, a Dutch pension fund, which definitionally is a socially responsible investor. And specifically as it pertains to climate, just given the geographic nature of the Netherlands, it's always a country that's been keenly focused on issues like this, just like much of Europe, and particularly Australia and New Zealand. And so the firm hired a head of ESG in maybe 2006, before people really were familiar with these terms. And we had real outreach with our companies in 3 ways. In terms of governance, we really started looking at boards and started weighing in on whether we thought boards were sufficiently diverse, what they could do differently. In terms of social issues, there was a lot of eliminating from investable universe companies whose business was just not considered, appropriate from a human rights perspective. But it's really the environmental, the climate things where I think APG really, really distinguished itself and is the hot topic that everybody's talking about right now. And so we all know the issues with climate, and we all know that there are certain industries that are pointed at as being big offenders, right? I mean, energy, obviously, and a lot of people talking about divesting in coal investment, things you can see that you can do to improve your sustainable picture. It's very hard to measure these things. So APG came and was a sponsor of the first real estate benchmark focused on measuring sustainability, and it was called GRESB. And it was a very detailed, very cumbersome document, and we required all of our large investments, those companies, to fill it out. It's a kind of life regret for me that I saw a great business right in front of my face and didn't notice it, because these surveys are really people intensive, and now there's many companies and their whole job is to consult to companies on how to fill out these surveys and everything. So that was a great business opportunity that I missed. So you guys should all look out for something like that. But it was just so interesting to see. It was really actually even a great tool to evaluate management, because some companies were like, I don't have time for that. I don't care if you own my stock or not. Some companies, I deeply care, even if I don't own your stock. But to see people start to hire teams, and really start focusing on this was really rewarding from a real estate perspective. And now I would say it is all ESG issues are top of minds for all boards today. But the UN coming out, and specifically the SEC providing specific guidelines in a very long document for climate, is going to, companies, every company is going to have to provide some kind of measurement of all of these metrics that the SEC is looking for, and which is it's going to be great for consultants, I think, and accountants. And but there's also really hard questions. Who at the company oversees ESG? Who at the board level oversees ESG? And so many companies, especially in our industry, many companies put out these sustainability reports, and a lot of the answers are in there. But the fact that the SEC is asking these very specific things of all companies now is going to really change things. It's going to be interesting. From a real estate perspective, I deal with public real estate companies. I actually think this is going to be a positive for the companies. Real estate is a pretty big climate offender. I mean, cement is like concrete is a huge climate offender, and the industry is relatively less disruptive in terms of focusing on innovation in terms of climate. And so I think that real estate companies, they have actually, ever since you started seeing these surveys trying to gauge how real estate companies were doing on climate, you've seen a lot of improvement. And I think the fact that there's real estate companies have a way to go to improve, but it can be done. I think that's going to be really interesting, because it could bring different shareholders into our universe. Looking at real estate companies, not just because they like the fundamentals, not just because they have a good dividend yield, but also because it could fill a role in a portfolio of a company that is improving its climate score. Yeah.
No, I mean, it's great to see that we're sort of moving behind sort of stated intention to actual accountability, where the actions really have to result in these metrics moving. And it's great. It's the example you give of concrete is certainly materials piece is going to be a big piece of this, and love to hear sort of more about what other ways in which real estate is moving towards sustainability, but more specifically to your points about business opportunities. We are here educating students. So what are the best ways for us to kind of teach them how to prepare companies, or be prepared to go into companies and make a change?
I mean, I think that innovation is the key, and a lot of it is. What I love about it is it's you can feel good about a lot of these things, but they also make a lot of business sense. Many of the shopping center companies are looking at increasing the number of electric car chargers they have. That's actually that's not as easy as it sounds, right? Just to provide the electricity, to figure out where it goes. But if you're charging your car, you're going to be at that shopping center for like 2 hours, right? And you're going to shop. I mean, that's good business. Same thing for apartment owners. I think that there's tons of innovation that can be done. I know maybe the easiest thing to do if you're in the real estate school is try to go take a chemistry class, because I think that there's a lot of innovations that are going to happen just with HVAC, just making it run better. Better ways of producing hydrogen. There's just endless things you can think about in terms of the way buildings are made, or what runs a building that could probably be done more efficiently. And just to get another great thing is to be part of a company that's just educating real estate companies on how they can adopt these things. What are the important things? But I think it's a great time for people who really care about the environment to be involved in the real estate industry.
Absolutely. And you recently joined a venture capital firm as an advisor, I guess, is called Fifthwall Venture Capital. And maybe you could speak to, you've talked about innovation, maybe a little bit about what you see at Fifthwall in terms of innovative real estate technologies related to prop tech and climate tech and so on, or just tell us a little bit about Fifthwall.
Sure. Yeah. Fifthwall, it's a young venture capital firm. It was founded only 5 years ago to focus on, they call it the collision of real estate and technology. And there's really 3 strategies. There's a prop tech strategy, there's a climate tech strategy, and there's a retail strategy. And I learned about Fifthwall almost at the very beginning. Some of the companies I work with had invested in Fifthwall, and I was really intrigued by what they were doing. And you think about what we've just been through in the last couple of years, and this, everybody's really, all the changes that happened to retail, from people suddenly going home and exclusively online shopping. I mean, you kind of knew that was happening. The fact that Airbnb is having real impact on lodging, you kind of knew that was happening. But the whole office, people not going to the office anymore, I think no one saw that coming in that way. And the office business, office leasing has been done the exact same way for like 100 years. It's really under innovated, and the same is true for all of real estate. And so I was thinking, and another thing I think about is, sitting on boards and giving up my, my full-time day job. It's important, I like to bring the investor perspective to the boardroom, and I don't want to be stale. And I think it's easy to get stale if you're not, in the market all the time. And I thought I really need to find out about these disruptive forces, because there's no way that the real estate industry is going to remain relatively undisrupted. Right. And so I've been spending some time with this group, very smart people, very young people. There's scientists on the climate side. There's real estate people on the climate side. There's real estate people and scientists on the prop tech side. Super interesting. And they've invested in a lot of great companies, innovating. A lot of the early investments were in the area of the single family homes. And innovations in title search and things that are very labor intensive. Right. And then on the climate side, they have just like a ton of cool things. They invest in this company called Icon, and Icon 3D prints houses, which is much better for the environment than the way we all know how to build houses. And they build also army barracks, and they can build, I think they said they think they can build up to 8 floors of an apartment building. 3D printer. I mean, it's incredible. Right. So yeah. So there's a lot of things like that. But then they also are investing in a lot of innovations that's related to solar and wind and electricity. So we really see a lot of things, and I've been in boardrooms before where people are just now are really latching onto and discussing all this innovation and what could happen and how things can go more efficiently. And so I feel it's been a real kind of shot in the arm for me to think about the possibilities of everything that's out there. And I think I'm bringing that back to the companies I work with too.
That's awesome. That's really exciting. Well, let me take you back a little bit to the REIT world, in which you spend quite a lot of your time. And I know we have some colleagues here who are deep into REITs as well. I wonder if you could talk maybe a little bit about transformations you've seen in REITs over the years that you were involved and continue to be involved in REITs.
Sure. Yeah. So I've been involved in the REITs my entire adult life, basically. So I was an analyst in investment banking out of college, and I was in the FIG group, the financial institutions group at Merrill Lynch. And at that time, REITs were actually banked out of that group because they were considered finance companies. They weren't really fully integrated real estate companies. They were considered to be just more financing real estate. So that was the biggest change that happened, which happened, after the Kimco IPO and in the early 90s. When because of the Tax Reform Act of 1986, it became very problematic to finance real estate development the way it had historically been done, and the public markets had a lot of promise as kind of like the lender of last resort. The negative is you have to sell your company to the public, and you have to put up earnings and everything, but your access to capital is amazing. So that's probably the biggest thing I saw. And then there's three things I'd say. So then the second thing I saw that was interesting is just interesting to see the arbitrage between public valuations and private valuations, and how one corrects the other. And there was a lot of private money raised on the sidelines in kind of like the middle 2000s, and you saw a lot of companies. And real estate companies weren't trading as well. You saw a lot of them going private. And I feel like we've seen quite a bit of M&A over the last 12 months. I have to think we'll see a lot more. There's just so much money on the sidelines looking to put money to work in real estate. And there's a lot of smaller real estate companies that I think it would just be, a really efficient way for that to happen. And then the third biggest change I've seen is the evolution of the asset classes. For the longest time, it was, multifamily, retail, office, industrial, lodging. Those were the food groups. Healthcare, and then healthcare was even like a newer food group, for not too long ago. And then digital realty came public, and so all of a sudden you have a data center company, and then you had Equinix and American Tower convert to REITs because that structure made more sense for them. And so all of a sudden, and in fact, when you look at many of the largest companies in our industry are not traditional real estate as we would define it. There's data centers and tower companies right at the top of the list of the largest cap companies. So it's just so interesting to think about that and what that just means for real estate. But also it's really changed the dynamics of how the market trades. I think REITs don't trade as much like, REITs would always kind of find their way back to real estate valuations, kind of back in the day. But now, because the benchmark really has so many of these large companies that are that have other things driving them besides real estate fundamentals and interest rates, that the stocks behave very differently in a group than they used to, which creates its own opportunity for stock picking, but just in a very different way than we did it historically.
Yeah. Well, great. That was quite the summary over many years. Those are three critical changes. Before you talked a little bit about how it was sort of the surprising change in flexible working that obviously hit us over the last couple of years. And I know you're a member of the board of directors for Industrious, which is a private flexible workspace provider. Maybe you can tell us a little bit about Industrious's model and how it's evolving.
Yeah, Industrious is a small, really boutique co-working company, and they really latched on to something when they started the company. I think they I mean, there's a bunch of great co-working companies, right? But Industrious really focused. They learned a lot of lessons from the hospitality industry in their approach to offering shared workspace, which I think was honestly visionary. I mean, now I was just in Rockefeller Center today, and you walk into an office building and everyone's like welcoming you to an office building. It's like you're being bombarded with hospitality. Like, wait, did you just ask me if I wanted a water? I just walked into your office building. I'm used to just standing in line with my pass, trying to get through the turnstile. But that theme of inviting people to work and making the office a nice place to be. I mean, that is how we're going to get everybody back to work. So I think that was a brilliant concept. And and their spaces are quite beautiful and enjoyable places to spend time away from home. They also, another thing that they do that distinguishes them is they rather than they strive to rather than lease space and then sort of sublease it out to your tenants, they partner with landlords. And so the landlords share in the upside too, which is actually how the hotel REITs work. And then you're not as on the hook for rent expense as you would be in the other model if your clients come and go. But it's a great young management team. It's these beautiful boutique office space. It's pretty cool.
That sounds very neat. And obviously you're also on the board at Host. And so as you're thinking about sort of hospitality, then there was a point in time, I believe, during the early days of COVID, where the hospitality companies, knowing that they weren't getting a lot of overnight guests, I think started to actually rent out some of their space so that you could have your own private space away from colleagues. Mm-hmm. Do you see, sort of, given where Industrious is coming sort of into the hospitality by offering sort of these additional amenities, do you see some sort of convergence over time, maybe between offices and hospitality?
Kind of, I think, one thing, when one of the things that people are concerned about have been in the hospitality business is how important group business is to the lodging industry. You need conventions, you need conferences. And, even though we're getting back to that, we're not back to that. But what's happening is a lot of companies that are remote or hybrid or now more scattered, they're having offsites more frequently at hotels. And so, you're bringing groups of people together for a few days, in a working environment. So I think that's a very positive thing. But I do notice now when I stay at a hotel, the desk situation is always much nicer. There often is, you often can find something out about a day rate. I thought of it myself. If I had 2 board meetings in a row and my dog barks a lot, maybe I should go to a hotel and leave the dog behind for a couple of days. So I think it all makes a lot of sense.
Yeah, neat. Well, in your intro, Heather mentioned that you're a member of Cary Business School's Real Estate Advisory Board, which we greatly appreciate. And we have some other members, I believe, here on the line. I'm curious if you could just sort of, from your perspective, talk a little bit about why you think it's important for practitioners and industry to be engaged with business schools and kind of where that symbiotic relationship is, also from your perspective in life, where I know that mentorship is something that's important to you as well.
Yeah, I'm very proud to be associated with this group. I've been doing it for some time now, and first, for me personally, I really do enjoy interacting with students. I love mentoring people. I love my kids won't take my advice. Maybe you guys will. So I love that part of it. But I also think it's so important. I love the, I think that, the academics and the professional people, this is a great way for them to meet, right? Because, professional people see things out in the world that you wouldn't see in academia. But academia is the basis of all good financial work, and there's great work being done that informs everybody's business too. And so I think it's a really good mix, and I feel lucky to be able to do it with you guys.
Well, we greatly appreciate it. And earlier, your note about encouraging students to take a chemistry class got a note in the side chat here. But I guess you I don't believe you came into, it was Maryland, right, where you started with a real estate background. So how did, sort of looking back now that you've been in real estate for so long, sort of what do you see as sort of a great way to prepare, in particular, as you said, for the future of real estate?
Yeah, I think that you have to, things that sound crazy, you have to take seriously is the easiest way for me to say it. I mean, I actually, as an investor, I sit on the board of Digital Realty. I passed on the IPO of Digital Realty because I couldn't at the time get my head around the thought that technology could create a net demand for increased space. I was thinking, more efficient and smaller. I realized the error of my ways and reversed that not too soon after that. And we were the largest owner of digital for many years. But it's so, I'm huge on the lessons of history and which I do. And you do see companies make the same mistakes every time, but everybody has to keep their eyes wide open that, and it's easier for younger people to do it. Honestly, you have to keep your eyes wide open that the future is definitely is not going to be like the past, but there are lessons from the past that you can learn. So make sure to mind, both sides of that. I do think being up to speed on climate to the best you can is just going to help you. There's so many great and interesting jobs, in that field out there. For me, my sort of, I didn't go to business school. I still wish I did. But I was a math major in college, and sort of being evaluated on a number was always really kind of a good thing for me. I thought school was hard, and when I did my math, I knew I was done because I got an answer, and then I could go stress out about my paper for like the rest of the week. But then when I started working, and I was a sell side analyst initially, and people, especially as a young woman working, people didn't, no one wants to play golf with me. No one wants to go to a sports event. I totally get that. But if I can produce a number that will help them, that people want to talk to me. And I've actually been able to carry that theme kind of throughout my entire career. So it's good to have a specialty. It's good to have a job where, kind of with KPIs, you can quantify your outcome. But keep your eyes open and look way forward, but look backward sometimes too.
And I don't know if you're involved in this with Fifthwall or through other engagements, but just the whole fintech aspects of the tokenizations and the blockchains and all that. Are you seeing that rapidly or slowly impacting the world of real estate?
I think now I would, I'm going to say slowly, but it's because I'm not informed enough, because it's happening much faster. I know that for sure. And that's another thing that, that I can say 2 sentences about and sound smart, and then have a lot more work to do in terms of understanding it. But there are things like, when you think about the cyber issues, that every company needs to be concerned about being attacked, and you have to pay, you have to have that. The plan for paying the ransomware and it has a lot to do with understanding, a lot of times that's happening in Bitcoin, and there's other things you have to understand. So it's even more complicated than it sounds. So it's important for people to have people, in their companies that are focused on that.
Appreciate that. And I'm curious, when you are, in your various board assignments, when you mentioned sort of a couple of the top risks, obviously the environmental pieces, what are the other top risks right now that the boards are fretting about? Give us sort of an overview of where they see the greatest dangers right now going forward.
The boards love to focus on dangers, so this might be depressing. But yes, so for sure, it's ESG issues, it's cyber, it's the supply chain issues, and when that's going to turn. It's the availability of labor. It's supply chain, I already said. Labor, yeah. I mean, inflation. People. There's not that many people working, honestly, that have worked in a sustained rising interest rate environment, and that creates a lot of uncertainty. there's a lot of uncertainty in terms of financing. I always, from a stock market perspective, I always think it's interesting because when the direction of interest rates or the slope of the direction of interest rates is unclear, that's a really hard time to be investing in public real estate companies or really anything with a yield. But once we're on a path, you can adjust your models, adjust your valuations, and find value in public real estate and in private real estate. And so I think we're all going to be tested on that quite a bit in the next couple of years.
Yeah, absolutely. Well, Mary, I so appreciate all of your comments, and I know that there's a bunch of folks out there in the audience who may have questions they want to ask you directly, but also we wanted to do a little bit of networking and just mix up people in different groups so that I don't hog the stage here with you. And so, Nicole, I think I might pass it back to you to be able to put us into groups or whatever magic you do.
Great. Well, thank you both. My favorite quote is "Your network is your net worth." So hopefully you stick around and talk to not only Mary, but the rest of our attendees who are on tonight. So I am going to assign us into breakout rooms. You'll be in a breakout room with about 5 or 6 other people. I encourage you to introduce yourself, where you're joining from, and just anything that stood out to you from the conversation tonight. So you are going to automatically move into those rooms now for 10 minutes, and then you'll automatically be brought back. So no need to take any action on your end. You can return to the main room at any time by clicking leave room, and I can always move you if there was someone you were hoping to connect with tonight. All right, here we go.